Dear students, welcome to Partnership Accounts. Today we'll see second problem of dissolution of partnership. Let me give you a recap of last class. So the dissolution of partnership means they'll give you simply balance sheet and also additional information. From the balance sheet, assets, whatever assets are there except cash, all the assets you'll be writing on the debit side. First step. And liability side, whatever liabilities are there except capital and reserve, rest of the liabilities credit side, second step. Then coming to the adjustments whatever they said, at what rate assets are realized, assets what we have done written on the debit side. When assets are realizing, so realization amount will be on the credit side, at what rate we are realizing it. And other assets also, how they are realizing it. If it is taken by partners, also will write it on the credit side. Realization of assets, credit side. In the same way, realization of liabilities, debit side. Like creditors or loan, anything is there, how they are making a payment. So that will be on the debit side. So third point and fourth point is over. Another important thing is that expenses will be always on the debit side, realization expenses. So like we'll be writing the realization account, then after that go for the capital accounts. Once capital accounts are finished, then cash account. Cash account is simple, we'll be opening with the opening balance of the cash and whatever is there in the realization account. So sorry, I have written revaluation, it is realization. So whatever there in the realization account debit side will be written on the credit side, credit to debit. In the same way, capital accounts also, wherever you find cash, generally closing one only you will find cash. So that debit to credit or credit to debit. Simple, cash account is very simple. So we'll see another problem so that you get a clarity of dissolution of partnership. Are you ready? Okay. So the problem is given on the desktop. Here the following is the balance sheet of Sudhir and Romesh as on 31st December 1981. Assets you see, cash account, cash at bank means opening balance of bank account you can say, and stock in trade 12,000, debtors 40,000, provision 2,000, furniture, plant, investment, profit and loss account. So these are the assets given. Now liability side we have creditors, loan from Lata. Who is Lata? Wife of Sudhir. Who are the partners? Sudhir and Romesh. Loan from Lata, Sudhir's wife. Sudhir's wife has given loan. So that is why they are saying loan from Lata. Loan from Romesh, reserve fund, capitals. Now if you see the balance sheet, whatever is given. So from this required information, first we'll write it on the realization account debit side and credit side. Debit side, what do you write? All the assets. Okay. So assets we are going to take stock 12,000 and debtors 40,000, not 2,000. 2,000 will be provision. So it will be taken on the credit side. So 12,000, 40,000, 8,000 furniture, plant 56,000, investments 20,000. These are all we are going to write on the debit side. Now credit side what we are going to write is 76,000 creditors amount and also debtors provision, that also comes on the credit side. And loan from Lata, this is also loan, and loan from Romesh. So these four transaction comes on the credit side. Reserve fund as usual we are going to distribute to the partners in the given ratio. Capital amounts, that's all. And also in the balance sheet profit and loss account is given. Profit and loss account is to be distributed to the partners. Generally profit and loss account will be given in the balance sheet liability side. Liability side means it's a profit. So profit and loss account data to partners account. It is given on the asset side, means it's a loss. Loss when we are distributing partners account data to profit and loss account. Reverse entry this is, just remember. And coming to the adjustments, the firm was dissolved on 31st December 1981 and the following was the result. What is the result? First one is Sudhir took over the investment at an agreed value of 16,000. When Sudhir is taking, so it comes in the revaluation account, realization account, credit side. And agreed to pay off loan of Lata also. Lata's loan also he is going to pay. So that also comes on the credit side. Now the assets realized as under. So how they are realizing the assets? Stock 10,000, debtors, furniture, plant. All these things total up. So at what rate they are realizing? This amount is given. This total you will be saying by cash. Realization account by cash. So these four. The expenses of 2200 will come on the debit side of realization account to bank. In brackets you will write expenses. The third point is the sundry creditors were paid off less 2.5% discount. Same like previous problem. Sundry creditors is written on the credit side of the realization account. When they are paying it off, debit side it come. So discount is there. Deduct the discount and pay it on the debit side. So debit side you will write to cash, brackets creditors. Same like previous problem. Now show the realization account, bank account and partners capital account. Now here rather than cash they are saying bank. Simple problem. So we'll start the problem. First we'll write all the assets. Take in blue pen. So first we'll write all the assets on the debit side. To stock except cash. Cash will write it in the cash account. So to balance brought down. Cash account or bank account, anything you can say. So what they said, cash at bank means you say bank account only. Balance brought down, it is 23,000. Next, all the assets. Stock is here 12,000. To stock 12,000. Next, debtors 40,000. Remember this 2,000 provision will be on the credit side. Debtors over furniture 8,000. To furniture 8,000. Next plant 56,000. After plant investments 20,000. Profit and loss account, it is to be distributed to the partners. Okay, so it will be on the debit side to P&L account. Already opened Sudhir and Romesh capital accounts. Profit and loss account 15,000. 15,000 in the ratio of last it is given. Last end of the problem 3:2 ratio. 15,000 into 3:2 ratio. 3/5. 15,000 into 3 divided by 5. 9,000. 9,000 means rest of for Romesh it is 6,000. Profit and loss account 6,000. Then after that, so this is over. Now coming to the liability side. Liability side, whatever liabilities are there, that we'll write it on the credit side first. First one is creditors. By creditors, by creditors 76,000. And also debtors provision is there. Provision also comes on the credit side. By provision. Provision 2,000. Next, what else loans are there? Loan from Lata. This is also liability. Loan from Lata. It is 20,000. Loan from Lata. Loan from Romesh. Loan from Romesh is 30,000. We'll see this later. Then reserve fund. Reserve fund is here. It is to be distributed to the partners. So we'll start the partners capital account by balance brought down. 20,000, 16,000. Reserve fund is the reserve fund. We'll distribute it to the partners by reserve fund. Reserve fund is here 10,000. 10,000 in the ratio of 3:2 into 3 divided by 5. 6,000 and 4,000. Next, what else is there? Coming to the adjustments, Sudhir took over the investments at an agreed value of 16,000. When Sudhir is taking it by Sudhir's account, 16,000. 16,000 and agreed to pay off a loan to Lata, wife of Sudhir. Lata's loan he is ready to pay off. When he is ready to pay off, it comes on the debit side to, you can say, Sudhir's account. Lata loan is here 20,000. 20,000. Then next, the assets realized as under. Stock 10,000, 37,000, 9,000, 50,000. We have to total up everything. Let's say here 10,000, 37,000, 9,000 and 50,000. So we need to total up 37,000, 47 plus 9,000 plus 50,000. It is coming to 1,06,000. When assets are realizing, you'll write by bank. By bank, assets realization, 1,06,000. Then after that, the expenses were 2,200. Expenses means you will write it on the debit side to bank. To bank account expenses, it is 2,200. Next, third point, the sundry creditors were paid off 2.5% less discount. Sundry creditors are paid 2.5% less discount. Sundry creditors are here 76,000 into 2.5%. Into 2.5%, it comes to 1,900. So this is, if you deduct it, 74,100. Sundry creditors we are going to pay at the amount of 74,100. Creditors are written on the credit side. When we are paying it with a discount of 2.5%, it will be on the debit side. So to bank account, you can say it in brackets, creditors 74,100. 74,100. Anything else is there? 76,000. That's all. This is realization account. Now it is, we have to calculate. So which side is more approximately? If you see, the debit side is more, 76,000 plus 2,000 plus 20,000, 36,000 will take, and 1,06,000. It is 2,20,000. and debit side 12,000 plus 48,000, 56,000, 42,200, 74,100. It is 2,32,300, means this is more. 2,32,300. (2,20,000) minus 2,20,000. It is coming to 12,300. Okay. So this is 12,300. Transfer it to the capitals account Sudhir and Romesh. You can write directly. So 12,300 into 3 by 5. 7,380 minus 12,300. 4,920. So this is over. Next, after that we have to prepare the capital accounts. So when we see the capital accounts, we have written reserve fund and also profit and loss account. Then what else is there? Capital account, can take realization account. So this is Sudhir here, debit to credit. So to realization account, Sudhir means here 20,000. Next here Sudhir is on the credit side. Credit side means debit side will say to realization account. Sudhir 16,000. And also realization loss 7,380 and 4,920. So that's all. So we can just close it. So debit side is more 46,000. This is 20,000. To cash account, bank account. Rather than cash, we are saying bank. To bank account. So this is balancing figure. 46,000 minus, this is 16,000 minus 9,000 minus 7,380. It is 13,620. And here it is 20,000 minus 6,000 minus 4,920. You are getting 9,080. Over. Next we'll see the bank account. For bank account, please be careful that realization account, wherever you find bank, debit to credit, credit to debit, you'll write. Bank is here, it's here. 1, 2, 2 transactions. We'll say by realization account 2,200. Second one is creditors amount by realization account 74,100. And here it is credit side, means to realization account 1,06,000. And capital, debit to credit by Romesh, it is 13,000, sorry, by Sudhir 13,620 and by Romesh 9080. Anything else we have missed? Let's check it out in the problem. $23,000, 1,06,000, 2,200, 74,100, and also loan from Romesh is there. Loan from Romesh 30,000. So that is to be paid off. So what do you say? Loan from Romesh. $30,000. Next 13,620, 9080. That's all. So we can just total up. So this is 23,000 plus 1,06,000. It is 1,29,000. And here it is 2,200 plus 74,100. Oh, sorry. 200 plus 74,100 plus 13,620 plus 9080 plus 30,000. 1,29,000. So problem got tallied. So let me explain you clearly once again, give you recap. So in the problem what we have done first, assets as it is written on the debit side. So assets are these 1, 2, 3, 4, 5. So assets we have written. Next also liabilities. Liabilities we found creditors, provision which is given on the which is deducted from the debtors, that is provision, loan from Lata. So these are the liabilities we have written. Then after that what happened? Realization of the assets. Realization of asset total it is coming to 1,06,000. So assets written on the debit side. When realizing the assets, it will be on the credit side. And loan is taken by, stock is taken by Sudhir. So that we have written here. And Sudhir's amount also. And expenses. Creditors amount is paid off. So that is at the rate of 2.5%. So 74,100 is paid off. And whatever we got, it is here loss. Loss is transferred to Sudhir and Romesh. After that we opened the partner's capital account. Here you have to remember one thing, as usual we have written the opening balances. Profit and loss account which is given in the balance sheet asset side. Generally liability side it will be given. When liability side is given, we could have taken on the credit side. It is given on the asset side. So we have taken on the debit side, profit and loss account. It is loss of profit and loss account. Loss on profit and loss account. So that we have written on the debit side. And reserve fund as usual you know. And from realization account we have transferred this loss here, and balancing figure is transferred to the cash account. Cash account opened with the cash, and this loss is here, and loan from Romesh we have written, and from realization account we got credit side to credit side, these two amount, one account bank and 74,100. So both we got it from the realization account, and also from the realization account credit side 1,06,000, credit to debit, and debit to credit we got already. So at the end it is tally. That's all simple. So hope it is very clear with this today's problem. So realization account preparation is important. Then after that partner's capital account, then cash account. Simple three things. Understand balance sheet and adjustments. Here main funda is that writing the assets and liabilities and how it is paying it off, how it is taking, assets who is taking, at what rate we are realizing, and liabilities how we are making payment. If you know that, enough, simple, the rest of the problem it goes smoothly as it is just posting the transactions. That's all. This is about the realization account in the dissolution of partnership. Hope it is clear. We'll see And see, already I have prepared a lot of subjects. Check it out in the description box or in the playlist like business economics, business law, management accounting and financial accounting, economics, statistics, lot more subjects. BCRW is also there, which already prepared. Please use it, and don't forget to share these videos, because with lot of care, with lot of energy and time I am preparing it. Please make utilize of it and have a bright future. Good luck.